You're watching Newsfeed AM. Let's give you the markets update now. The JSE joining the global rally yesterday as investors shared news that the United States economy expanded well in excess of forecasts in the most recent quarter and positive jobs data. Well, the rand, on the other hand, slowed its rally. Let's have a look now at how the markets are performing in early trade. Joining us for that conversation, Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank. Mr. Thulare, top of the morning to you. Let's start off with the quick overview of how the rand is trading so far this morning and perhaps the overall outlook on trade this week.
Yeah, good morning, Kholi. I suppose the last Friday of the month, and also the rand finding itself on the back foot yesterday and finishing the session weaker. On the day, we traded from 1753 all the way to 1789. The rand weakness can be attributed to a weaker euro, especially after the ECB raised interest rates yesterday afternoon. And then after that, you had the much better than expected US data that obviously caused the dollar to rally strongly across the board. Locally, we did also have PPI numbers that slowed down to about 4.8%, which is down from the 7.3% that we'd previously seen, but it had very little impact on the local currency. The rand, despite all of this, still remains 6% up for the month. So we've actually appreciated 6% against the dollar for the month. But this morning we get underway at 1780 against the dollar. Against the euro, we're around at 1954 level, and against the pound around 2277. So on the data front, there is quite a bit to expect as we close off the month. There is, at 11 o'clock this morning, some Eurozone confidence numbers for July. Then at 2 o'clock, we have the local budget numbers for the month of June. And then the last data set at 2:30 this afternoon is going to be the US numbers. Then after that, I think then the market will start to slowly close off for the month of July. And obviously now we start focusing for the month of August, where there will be a plethora of event risk. The key one locally will obviously be the BRICS summit in 3 weeks' time. So it is going to be quite interesting given the geopolitical, spats between ourselves and Russia and the US. But look, it's going to be quite interesting as we go into the month of August.
Let's pick up on car power ships. That push, it continues with the bids to secure environmental approval to install the 2 ship-mounted plants in South Africa's ports. Help us make sense of these developments and whether they're likely to have any influence on how the markets are trading.
Look, from a power perspective, yes, they've received to proceed with the submission of environmental reports to upland these floating gas powered ships in Richards Bay and also Saldanha. It's the latest development. It's been a drawn out environmental approval process that has faced many delays and many hurdles, which is now more than 3 years. Now, they've been granted generation licenses for 3 projects by the National Energy Regulator in 2021 already. But already this year, the Department of Transport approved the application process for them to access the 3 ports for 20 years. Now, just don't forget that, the company has said that they're engaging in extensive processes, even with the likes of Transnet, to reach an agreement on the location for the power ships where they will be uplanded. And it looks like, the port of Ngura will also be one of those ports. But look, the other issue with all of this is that the electricity minister, who's got powers that include the authority to determine where the new generation capacity and also emergency procurement powers, he's vocalized that his support is for the power ships to come into effect, but he believes that the terms of the contract should be reduced, not 20 years, but at least 3 to 5 years. So it looks like there's still going to be a bit of negotiation, but at least we are stepping in the right direction, especially given the fact that, the power supply issues have really obviously impact the growth of the country. So at least at this point in time, we are making headway in terms of those structural reforms that we keep talking about.
Let's pick up on company news. Liberty 2 Degrees has announced that the unlisted Liberty Group plans to buy out L2D's minority shareholders. Matete, talk us through the specs of this deal.
So remember something, Sandton City part owner and also JSE listed Liberty 2 Degrees obviously announcing yesterday that the unlisted Liberty Group plans to buy out their minority shareholders, a move in the real estate industry and investment space that's obviously seen their share price, surge about 40% yesterday. But if you think about it, Liberty is part of the banking giant Standard Bank, and obviously the deal there is expected to be around 2 billion rand, according to listed property, insiders. But it looks like the overall value has not been confirmed. Now, one of the other notable shareholders in all of this is Coronation Asset Managers, with them being also a minority shareholders. Now, Liberty also confirming yesterday that the consolidation will form part of the greater Standard Bank group, and obviously they will be delisted from the JSE main board. Now, the transaction is quite interesting given the fact that real estate has obviously been something that has been battered over the past few years. Obviously, there's been structural balance sheet rebasing. We've seen the COVID headwinds with a lot of, real estate companies losing out, and also the noticeable increasing interest rate environment. But the transaction, Liberty Group did say that they're expecting to finalize this by the end of the year. So for them, this 2 billion, obviously it is part of their strategic initiatives. So it actually just shows you that, look, despite all that's coming through, there is still a value that is being added in the property sector, despite what we're seeing overall.
Let's conclude with Intel reporting second quarter earnings, which showed a return to profitability after 2 straight quarters of losses. Your quick sense, Matete, on their numbers, and keeping in mind that there's been a general drop in computer and laptop demand.
So look, quite an interesting set of results. I mean, they're still issuing a stronger than expected forecast. They still said, look, there's still going to be persistent weakness in all segments of their business throughout till the end of the year, and that server chips won't recover up until the fourth quarter of this year. Now, cloud companies at this point in time are focusing more on graphic processors for AI instead of essential processors for computers. Part of the reason of the numbers for the strong report was that the company has also made progress towards slashing about 3 billion in costs this year. I mean, they've already slashed their dividend, and they're planning to announce about 10 billion in cost savings by 2025. That also is inclusive of laying off staff. In the first quarter of this year, I mean, they did say they posted their largest loss ever, as the PC and also server markets did slump, and the demand for declining in essential processors. Already, the results yesterday beating the forecast that management had given for the second quarter. But look, I think as they're showing that obviously the big focus at this point in time is artificial intelligence over central processors. So if anything, like they say, up until the recovery happens in the fourth quarter of the year, still do expect some sort of persistent weakness in the market.
Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank. Thank you very much for that markets update.